Morning, Steve here in Chicago with the morning grain comments. Overnight, prices somewhat mixed. You've got soybeans and corn up, wheat unchanged. Outside markets, looks like stocks are going to be higher. The dollar's a little bit lower and crude's higher. As far as the news overnight, I think we're all trading the aftermath of the USDA surprisingly low U.S. corn and soybean acreage numbers. The market's trying to digest just how that happened and whether or not they should trade it any further. But the funds did cover approximately 110,000 corn contracts of their short position and now still short 200,000. They added to their bean position. They're now long 53,000 contracts of beans. They're still short 46,000 meal and still short about 40,000 wheat. And so we'll see if they want to hold on to those positions. Now we're talking about export sales. The number is about 1 million tons of beans, maybe a little under 1 million tons of corn, both old and new crop, and 300,000 to 400,000 tons of wheat. Wheat trade remains slow. Vessel lineups remain slow, and I think part of it has to do with the impact COVID has had on economies around the wheat buyer countries and their inability to buy wheat right now. The corn exports, again, U.S. corn export prices are the highest in the world. And so if there's demand around and shippers can ship, we may lose some export demand. Yesterday's ethanol data showed a slight increased production, but a big drawdown in stocks. And so that might be a little supportive too. As far as the beans are concerned, it's up to China. Overnight, U.S. Congress passed new sanctions against China because of the Hong Kong situation, and that could jeopardize the U.S. trade deal with China. I think they need to buy beans, but so far they have been absent for the last few days, which could offer some resistance to the marketplace. Farmers have been big sellers of especially corn on this rally, and they should continue in case the weather turns closer to normal. July 4th weekend, it's a holiday. We'll be closed tomorrow. We'll close early today, but it should be hot and dry across most of the Midwest. Yesterday's long-range weather maps kept the ridge in the U.S. Midwest for 2 weeks. Overnight, it basically took the ridge out. And now this morning, the maps are kind of in between, in that the southern plains and parts of the western Midwest will see warm and dry conditions over the next 2 weeks, but there will be rains moving over the top of the Midwest and the northern plains down to the Great Lakes and down into the southeast. There will be some pop-up thunderstorms in the dry areas of the western Midwest, but may not be enough to help crops. And so we're going to change these maps twice a day over the next 3 days, and then Monday we'll see what kind of forecast there is. And from there, we'll decide whether or not the funds want to cover their 200,000 contract short in corn, want to add to their bean long, and cover maybe some of their wheat short. So it's going to be very volatile on Monday. Risk is going to be high, so make sure if you have positions on that you're hedged, or if you're farmers, you might want to sell some cash or buy some puts in case the market sees better weather Monday morning than it does today. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Have a safe 4th of July weekend. And remember, changing tomorrow starts today.